Welcome to Charts Today. My name's David Linton, and today's edition for Friday, the 2nd of March, comes to you from a still very cold London. And we start by looking at the dollar. Dollar retreating somewhat yesterday, just pulling back into the cloud. We're not yet bearish on the short-term trend, but we do look like we've hit resistance here on the point and figure chart. So still bearish, medium and long term. The euro actually just starting to look stronger, of course, from that weaker dollar. So we are just seeing the euro potentially coming through the cloud. Japanese yen, we see here the dollar really sinking lower. So this is often a first sign of the dollar struggling. We see it against the yen, and we've got downside potential to about 104.50 on the dollar yen, so it's about 1%. It really does feel that sooner or later we are going to break this 100 yen level. That's where we saw in 2016, and here we see downside targets into the 90s, just resting on long-term support on this chart, but on the 0.5% chart we are looking bearish. So it is looking bearish for the dollar. Taking a look at sterling. Sterling sank lower against the dollar the last few days and a stronger dollar, but not recovering the same way that we're seeing the euro or the yen recovering. So sterling looking relatively weak. Downside targets here to 136 and 131. Looking at sterling against the euro, we see it marked here as well, and we're going lower there too. Against the Swiss franc, sterling looking very weak and falling away to 124, 127, 127, and then behind that 124. So downside potential of anywhere between 2 and 3.7%. The Aussie dollar, we're seeing sterling just in the doldrums here a little bit, and again just weaker there too. Bitcoin had a reasonably strong day yesterday, and now nudging the 11,000 level. We see here just making new highs, bullish again above the cloud. We are seeing as a feature here, this was like a 2-week bull trend, a few days bearish, and probably another longer trend. We're seeing the skew going with the longer term trend, so it's quite interesting there. We've got upside targets of about 12,000, so that's another 9.5% upside, so really quite significant there. Last night the US markets fell away quite strongly. S&P down 1.3%, Nasdaq down 1.5%, and the Dow down 1.6%. So we really are just seeing the recovery faltering, and that's no real surprise. What we need to be worried about is this lower low. So we haven't made that yet, of course, and we're now entering a phase where we're banded between the high of January, the low of February, and in March it will be a case of can we break higher or will we go lower, and very, very difficult to say which of those will happen. The long-term trend is still up, but we have got short-term downside targets. In the end, I don't believe anyone truly knows. We have to wait for the break. The Dow breaking lower on the short-term chart, so that's bearish, and the Russell 2000 also was off quite significantly yesterday as well, just holding its bull trend there. The futures off very slightly this morning, the S&P future off 0.05%, and the Nasdaq E-mini also off slightly, off 0.1%. So no real heads up yet as to which way the markets will open, but we are in bearish territory on these charts in the short term. FTSE 100 down 0.5% this morning, sinking lower. The low that we saw in February really now looking like it might well come under pressure. We've got a downside activated target of 14% lower on the FTSE, so that's looking really worrying. And the FTSE 250, we're also seeing another 14% lower target here. This low starting to look like it's coming under pressure, bearish short term. Again, not many downside targets, just the one, so it's too difficult to say with a strong conviction that we're going lower. The DAX really falling lower this morning. It's actually taking out its low that we saw in February, so this is extremely worrying for the German market. Downside target of 17% activated. Strong euro, German stocks looking much, much lower, and the CAC Quarante this morning down 1.3%, also below the cloud, so that is looking bearish too. The Nikkei fell heavily yesterday. This is Japanese 400 index down 1.9%, so nearly 2% downside, and this looking very much now like a cloud transition here, where we're seeing the lagging line, the price, all below the cloud, medium-term bearish. We have got a downside target not yet activated, some 19%, an absence of short-term targets on Japan. Hang Seng, we are seeing just a little bit lower as well, and the S&P, the Chinese market in Shanghai also looking a little bit lower. The Sensex, India, looking uh, not as weak as the other markets, down just under 0.5%, but in the doldrums and just struggling to hold on to that bullishness, and several downside targets there, so also looking weak. And the Australian market just starting to enter weaker territory, but we do still have quite strong medium-term upside targets. Brent crude falling right back yesterday, back below the $65 level. We are in the short-term bear trend, so really quite key there. We are seeing here just sitting around this 63.70 level, looking weaker there. The stronger dollar having had an effect in recent days, but crude oil just falling away, and WTI much lower as well. We are seeing targets back to $60, even one below $60 at 59.90. So it will be quite significant. We're now nudging those levels and those lows. Of course, we had these levels in February, so lower than those levels, that would be the beginning of a new downtrend in crude oil, which would be coming unseasonably early. Normally, crude is falling away in the summer. We're seeing here US nat gas still bearish in the medium term and long term, but short term just finding some recovery. 2.8% the upside. Sorry, $2.8 to $2.80 is the upside sort of target there. Gold has had a terrible couple of days, but starting to look a little bit better, but still bearish below the cloud on the short term chart. I did put a gold report out at the start of the week, and we do see gold tends to fall seasonally just for a few months in the spring before coming back strongly again in the late spring, early summer. So it would be interesting to see that. Looking at silver, similar position, and if we look at US 10-year yields, in bearish territory at the moment, so we are falling away there on those Powell's comments yesterday. We are just seeing a slight fall off in the yield and just rolling over here. So although we've got targets to 3%, and it does look like we will get to 3%, we are just in a short-term bear phase. No clear downside targets, so it's too early to say that bond yields are going much lower, even though we've got a short-term bearish trend. Taking a look at Apple, Apple was off 1.7% yesterday, just hitting that same resistance level back in January. So just as much as we got there, it was never going to be a foregone conclusion that we would just go straight up through that level. And Amazon did something similar a few days earlier, where it was just nudging those new highs, and has struggled to hold on to them. But it is the one stock actually that did quite clearly take out the January high in the market, but has just again pulled away. Yesterday it was down 1.2%. Google was down very strongly, down 3%. So we are just seeing Google selling off and just turning bearish on that short-term chart. So that is a little bit more worrying. Downside target to 1070 was given, and we're now there. So that's been met, and there's no new downside targets, or this medium-term one. We are seeing quite significant downside targets there. And Facebook just struggling to hold that 180s area and back into the mid 170s. Really just been a very flat performer over the last few months, but over the last year or two, of course, been an amazing performer. And Microsoft also has had an amazing trend in recent days, and it's just in recent years, but it's really just holding that just at the moment. So today is going to be very important as we close the week, and if you're in Europe, travel safely home for the weekend, and until Monday, happy charting. See you then.